our next speaker is Teresa Blake, Managing Director of Business Optimization with KPMG, the multinational audit, tax, and advisory services firm.
Again, my name is Teresa Blake. Look at this. There's even a picture. I know. I love that. Again, I'm with KPMG based in Charlotte. I want to take you back a little bit before we talk about how digital mortgages are helping make more homeowners possible. I want to take you back to 1995. I am 24 years old, so I'm going to date myself. But I want to take you back to 1995. I'm thinking about buying my first home. And my father says to me, it's going to be cheaper than rent. And I went, oh, really? Are you sure about that? So I went and met with a mortgage broker. And one of her first questions is, how much income do you have? I told her all about my scenario. And she says, okay, that's great. You make enough income. She says, how much money do you have to put down on this house? I said, about $3,000. I thought that was a lot of money. She's like, yeah, that's not enough. I said, well, I'm a responsible, individual. I pay my bills on time. She said, you need 20%. I said, I don't have any options or choices. And she said, well, there's an FHA product. Here you go, honey. She brings me a package of documents this thick. And she says, let's start the application process. I'm a pretty bright gal. I start reading. Probably 25 questions later, I get through the application. That's 5 pages. Digital mortgages today, the average homeowner can finish an application in 6 minutes, okay? So when you think about the level of complexity that we were dealing with in 1995, can you imagine giving that same application to a borrower today? They'd be like, I don't want to do that. First of all, it's paper. Second of all, you want me to read every piece of paper in that binder to actually get my application? I went, this is crazy. So when I think about where mortgages have been and where they're going, the world's changed. The borrower's expectations have changed dramatically. So if you think about all of our best experiences, it really changes what we expect from mortgage. And I know that's hard to believe because when you still think about where FHA is today, it hasn't changed as much as we'd like, right? But if you think about where transportation has been, I take an Uber. I don't rent a car, right? I actually watch my videos on Netflix. I don't go to Blockbuster anymore. There isn't one. So all of the expectations and the way that the market has changed, that disruption that happens in our lives, borrowers expect a very different experience when they come in to get a mortgage. The way that they want to shop for a mortgage, the way that they want to apply for a mortgage is night and day from where we were just 2 years ago. Mobile, believe it or not branches, is driving the way that we take applications. How many of you know how many mobile phones there are in the world today? Anybody take a guess? Okay, there's 7.9 billion people in the world. There are 8.9 billion mobile phones in the world today. There are more mobile phones than there are humans, which is an interesting fact. In the US, we are at 300 million mobile phones. There's not quite one for every person, but if you think about how that's changed our banking behavior, mobile's changed everything that we do, right? It's changed how we apply for things, it's changed how we research, but all of the ways that banking, everything from payments, how many of you have used Zelle? Anybody? Yeah. Okay. Go on your bank's mobile app and see if there's Zelle connected in there. You can actually make a payment to another individual with a click of a button, and you don't have to write them a check. You don't have to do anything. It's a lot like Venmo. The way that we get mobile advice for wealth, right? If you've got an IRA or a 401k, think about all of the times that I, get these messages from my broker at Merrill saying, hey, we just released this earnings report. You should go read it, right? Based on my investing habits. All of that continues to change, and the way that borrowers ingest data and make transactions continues to change. How does that change in mortgage? Well, there's a couple of benefits for the lenders, and they care about it. One, because a mobile application is a self-service application. So if you think about the digital transaction end-to-end, who does it benefit? It benefits the borrower, but there's a huge benefit to the lender. If we think about it, a digital application can reduce their cost to originate by 50%. If the borrower never talks to a loan officer because they're experienced, they have a significantly reduced cost. So there's also benefits to the lender in addition to the borrower. The other thing that's really interesting is there's also an increased customer satisfaction score. So when I do a fully digital application and J.D. Powers goes to survey that borrower, they're like, that was the best experience ever, right? But if they get stuck and they have to talk to a human, even if they started that process digitally, they actually still have a higher CSAT score. So all throughout the process, end to end, that cost to originate is better, the pull-through is better, the borrower satisfaction is better. If I can improve all of those things, I can reach more borrowers. And I could actually approve more borrowers than I could before. Those could be CRA borrowers that maybe might have not come into a branch, but they may feel much more comfortable coming in digitally. This is the other interesting slide I wanted to share. When I actually looked at the digital providers 2 years ago, half of this list didn't exist. I went to a digital mortgage conference last year in Las Vegas. There were 150 names. I went through the itinerary, 150 names that I didn't recognize and that were not there the year before. So if you think about the providers coming into the market, there's significantly new entrants, and they're all trying to solve the same types of problems. They want to make it easier for a borrower to get a mortgage. And they're solving the pain points of areas that, candidly, took someone too long to do. So if you think about it, the point of sale, POS stands for point of sale, those providers are solving a problem. The online origination applications that existed 2 years ago, it still took a borrower 60 minutes to get through an application. When Quicken launched Rocket Mortgage, all of a sudden a borrower can do an application in 6 minutes. Guess what? Everybody followed. Quicken had all of a sudden all of these new players in the space to compete with. Lenders were looking at Blend and Roostify and CloudVerga. Those providers didn't exist years ago. You could do an application on a CloudVerga application in 6 minutes, the same as Quicken. But guess what you have? You now have VA loans in that mix. You have all of the HUD products, right? All the FHA products. Those applications can be completed in the same way as if you were doing a 30-year fixed with Quicken. So you can start to move much faster, reach more borrowers, and candidly get borrowers in CRA and LMI areas that you couldn't touch before because they didn't want to walk into a branch. Now they have options to do this work online and get a loan where maybe in the past, they may have been turned away. So again, lots of great products that are filling and solving gaps in the market, all with the same purpose: getting a borrower in a home in time so that they can meet their closing date. And that includes low to moderate income borrowers. Half of the tools on here have functionality that show those borrowers very specifically how to compare costs, how to check to see if I put in just a little bit more on my down payment, what does that do to my monthly payment, and how does that change over time when I actually get down below the 80% and I can get rid of mortgage insurance on that product, right? So if you start to think about the educational aspect of these products, they're really focused in on helping that borrower get smarter and get better educated about the loan that they're buying. Again, some of these products didn't exist 2 years ago, and it continues to evolve and change. There's a company out there called Better Mortgage. I literally learned about them a couple weeks ago when we were doing LOS selections for lenders. I hadn't heard of them before, and a lender brought it to me and said, hey, have you guys heard of XYZ? We were like, yeah, we do tons of research all the time. Here's another one. We ought to go make sure we understand who they are and what they do. But they close loans much, much faster than the traditional guys. So we continue to try and educate not only our lenders, but ourselves, and keeping up in this marketplace has been very challenging. Customers, though, when I think about the changes and advances in digital mortgage, the customers and borrowers are driving the change. So when we think about all of the things that the borrowers are demanding, they're saying, you know what, I'm getting all of my data and insights from social media. They don't go ask their mom or dad. They actually get insights from Facebook. The fintechs are also driving that change. They're coming up with solutions, candidly, to problems that we were all challenged with, right? They're finding new ways to tackle appraisal. I actually heard of an innovative product where they're using drones to go out and take pictures and photograph the site instead of doing an appraisal with a drive-by. Again, very risky, right? You might say, I don't know, will we ever go that way? But they're out, they're testing, they're prototyping, and they're piloting, and they're trying things that, candidly, we wouldn't have dreamed of 2 years ago. And then I also think, millennials have a different way of borrowing. They have a different way of buying. They may never walk into a bank branch. They may do all of their research online. They may actually buy a house sight unseen. We're seeing more and more of that where, they're taking the data from Zillow or they're taking the data from the realtor and they're buying that house. They're like, you know what, if it's got some problems, I'm going to fix it, I'm going to invest. But I'm good. I've got all the data I need. I'm going to make a purchase decision. Yeah, right, pay for it with Venmo. You or I may have never thought of doing that, but the way that millennials are buying is changing the way we're all thinking about the industry. And then the other thing I would say is, the high cost of banking is something that as borrowers get smarter and do their research, when they look at a loan estimate and a closing disclosure and they look at all of the fees that are on there from beginning to end, they go, why am I doing this again? And why am I paying this high rate? Why am I paying this origination charge of $1,200? They look at all of that and they go, I don't understand what I'm getting for that. I get it, I'm getting a mortgage, I understand that I'm going to be paying it back, but what other options do I have to fund this home purchase, and how else might I get there? So they're really looking at fees in a very different way and really wanting to understand what am I getting for that value, and are there alternate sources of funding other than going to mom and dad or a bank? Again, it continues to change, and we're excited to see where they take us. I wanted to just close with one more story. I had another borrower that I was working with. They were a borrower who most banks probably would have turned away. And they said, I'd really like to get a mortgage. I really want to understand what I need to do to be a successful homeowner. And I said, well, that's a really great question, right? Because owning a home is more than making your payment, putting a down payment down. You've got to be able to fund all the bills that go with it, right? And I said, so let's talk about what your bills are like. Let's talk about what you really need to have in an emergency fund in the event that something goes wrong in this house, whether that's a refrigerator going out or a furnace, right? You need to be much more prepared than just, getting a mortgage online. And having that conversation with someone early in their purchasing experience, helping them be a better and more successful homeowner, digital mortgages help drive that, but it's still the human interaction that you have one-on-one with a borrower that change their home buying experience. And that takes all of us in this room to make that happen. It takes the lenders and the technology providers all working together to give those homeowners, whether they're experienced or not, enough understanding of what it takes to be a successful homeowner. That personal connection that you have with those borrowers is so tremendous. So I ask each and every one of you to educate and to work really hard to drive those borrowers into homes they can afford. Thank you.